Hello guys, welcome to my YouTube channel. In today's video, I want to teach you guys how to spot liquidity and inducement on the chart. Okay, now let's dive in. Now this is my Bitcoin chart on the weekly time frame. Now when you look at this chart guys, what do you see? You can spot that price is making a higher high. We broke structure to the upside at this level. Okay, let me use this guy to make it tick. So you see, okay, now we'll break structure to the upside, and then we'll have second break again to the upside, and then at this level we do what? We do have what? A change of character. All right, change of character simply means the market wants to what? Reverse. And then after a change of character, we have what? A continuation break of structure to the same direction, which shows us that what? The market has what? Fully what? Reverse. Now how do we spot liquidity and how do we spot inducement in this kind of market? Now liquidity is simply what? Money. All right, and we'll talk about inducement. Inducement simply means what? Trap. All right, so how do we spot money? Where are the money in this market? Where are the money in this market? Where are they located? Now money are simply located at every old highs and at every old low. Now for example, let me use the path tool. Let me show you something. You see that from this area, price retraced down, broke structure to the upside, retraced down again, broke structure to the upside. We see a smaller break here. With your tiny eyes, you can be able to spot it. And then we have what? Failure, swing, and then we got what? A change of character. Price continue to what? Break structure to the same direction. And this is the most recent break of structure that we have here on the weekly time frame. All right guys, so this is what the market structure. All right, price was what? Bullish at a point. We changed character and now we are currently what? Bearish. Now old low and old highs simply means the area where price reversed. All right, now for example, you see that price was here and then we get to this area, price reversed from here to break structure to this area. Now for price to reverse from here, we have what we call what? This is what? An old high. It simply means what? There is what? Money resting above this high. Money, you can label it using what? Dollar. All right, there is money resting above this old high. All right, so from this point, price sweep this money up the way to this high, and then after sweeping that money, price do what? Retrace. Now this is retracement. As price retraced, for price to retrace, what happened to this area? This place becomes what? Another high. All right, there is liquidity resting in old highs and old low. Remember, okay, so price retraced, giving us this place and a previous high. So there's liquidity resting there, meaning we'll have something like this, dollars resting there. Okay, now at every high and low, old highs and low, there's liquidity resting there. Now having said that, where can we spot the most recent liquidity right now? Now this is the most recent structure. You spot the most recent liquidity using the what? The most recent what? Structure. So this is a break of structure to the upside, meaning that this guy, this place becomes, this is what? An old low. An old low. So we have what? Liquidity resting in this low, at this low here. This is it, bam. We have liquidity resting in this low, and that is what we call what? I can use dollar to represent it here. Yes, we have liquidity resting here. All right, so it simply means when it comes to the ideology of liquidity and inducement, our break of structures, what we say it is break of structure in market context. In liquidity and inducement context, it is called what? Liquidity sweep. Some persons call it buy side liquidity, some say sell side liquidity. Like this, in this case, this is what? A bullish move. So in this bullish move, all this area where we have a break of structure, we can call it what? A buy side what? Liquidity. That is in liquidity and inducement concept. All right, but in market structure concept, that same area is what we know as what? Break of structure or change of character, because this place they are what? Old highs or old low. All right, so that is it when it comes to that. Now let me show you something guys. I want to tell you about what? Inducement. I want to tell you about inducement. I just told you that liquidity simply means what? Money. And for us to, where we can spot money in the market is around what? The old highs and old lows. That is where money are stuck. And that money simply means people's stop losses. People's what? Stop losses. Now let me show you an example of what? Inducement. Inducement and liquidity works together, because when there's inducement is just from the word induce, to trap traders. All right, now it is a trap. Why do you say it is a trap? It is because you see your setup very accurate, clean, beautiful. Let me show you, for example. Let me say market is breaking stock to the upside. We break stock to the upside. We break stock to the upside. I just want to show you something. I'm coming. I want to show you how you can understand liquidity and inducement. Now you see the structure. This is what? Bullish. We are very what? Bullish. Now this is the most recent break of structure. Remember, this place where we break structure is called what? Buy side liquidity in a bullish trend. When it comes to liquidity and inducement concept, our break of structure normally means what? Buy side what? Liquidity in this trend. So meaning that this is an old low, but price took it out. All right, meaning that there was money resting on this high that made price to come this place and what? Take it out. So now let me show you. Once we have our most recent break of structure, we want to what? Buy from what? The demand level. The demand level or order block is around what? This area. All right, now we want to buy from this area. See what we do. We are expecting that price should come from this area. Look guys, look at, we are expecting that price should come from here, tap our demand zone, take our order and give us what? Profit. That is our what? Expectation. But see what the market does. Let me show what inducement is and how you can be able to spot it. Now inducement simply means what? Trap. When I mean trap, that's your best setup. That's your best setup. Everything was complete. You take your order, you put your stop loss, you enter your you place your order, you put your stop loss, your money below your order block and everything, and then you allow it and you're watching to see what the market does. And unfortunately the market goes against you, you hit your stop loss, you lose your money. You have been induced, because if you actually know that that is a trap, you will not be involved in that setup, because you know that it's a trap. So inducement, in most cases, you don't know. You cannot tell. Even what you call inducement sometimes plays out, and that is why there is no 100% guarantee that a setup must what? Play out. That is where risk management comes to save you guys. Risk management comes to save you. Now let me show you here. You see, so on this area now, we are waiting for price to come here, so we'll take our trade. Now see what we do. We smart money traders, see what we do. Now price come here. When price come here, we don't enter immediately. We want to look for what? Confirmation. Now the confirmation is this. We see that price react. We want to see a change of character. This is what? A change of character. The first break of structure to that direction. We say, okay, this price is about to reverse, but we are not fully what? Convinced until we see another second break of structure to that same direction. So while we are waiting for second break of structure, the second break of structure occurred. Look at it. It happened here. Now that this second break of structure has happened, let me label it using this guy. We have what? This is what? Our change of character, guys. This is our change of character. Then this is what? Our what? Break of structure to confirm the move. Now there are what? Two traders. We have what? Aggressive traders and conservative traders. Now aggressive traders want to enter aggressively from this second break of structure, and when they enter there, see what they do. When they enter there, bam, this is what? Where they want to enter from, and they put their stop losses below this zone. This is it here. Their stop losses comes what? Below what? This guy here. All right, their stop losses comes where? Let us use dollar to represent it. Let's use dollar to represent it here, so you know that there's stops there. Okay, so this is it, guys. Okay, now their stop losses are below this guy. They enter from this place and they target what? Maybe 1:3, 1:4, whatsoever. This is how it normally is. This is how it is. This is it, like this. They use their long buying tool, and then we'll have this. Their stop loss is just what below this guy, and they are targeting what, maybe the next high, something like this. This is it for aggressive traders. All right, this is where they want to enter from, and their stop loss is below here. Now we conservative trader, we don't want to enter on this break of structure. We want to enter on the what, change of character, the other block of the change of character, which is this guy. This is it here. This is the other block of the change of character. Is always below this guy, like this. You see below, it's below them. You understand? Now see the plan is below them. Now this is what we'll get here. We want to enter on this other second one. This guy here, I want to enter here, and then target what, the same area where they're targeting. Then our stop loss will just be a bit lower, just below the other block, like this. Then now what happened? We now assume that these people that enter first, the early buyers, and place their stop loss below here, we want price to use their stop losses, that is their money. We want it to be what, to be used as what, liquidity, to fuel and trigger our order to go our own direction. You see it now. We have to wait for price to create what, change of character, and then break of structure, and then this is what we'll do. We are expecting that price do like this. We're expecting that price come, take out the orders of these people, hit their stop losses, tap us on our own order block, and then give us what, the profit. Guys, do you understand now? This is what's happening. And then give us what, the profit. That is what we are expecting. That price comes down from this area, sweep their liquidity, tap our own order, and what, give us what, profit. Give us what, profit. That's it. That's our expectation. So now we are expecting that. It means that this low resting above us, the liquidity pool, the money that has been placed just above our entry, we look at it as what, inducement. So we want price to sweep it, use it as fuel, tap on our order, and go. That is it. That is what inducement. So this is what inducement. But sometimes, mind you, price actually respects that order there and goes their way without even coming deeper to tap us in. So it is two things. Sometimes it works out, sometimes it doesn't work out. All right, it is what, a two-way thing. Sometimes it works out, sometimes it doesn't work out. Sometimes you can stay here and be waiting, and then you become what, the liquidity. You can be waiting for price here, and you become what, the liquidity. So if you don't want to become the liquidity, you have to be very smart enough to understand when there's liquidity and when there's inducement. And then you have to work on your risk management, because even where you are thinking you're not the inducement, you are the inducement without you even knowing. It is until proven otherwise. When I mean proven otherwise, it's until price have hit your stop losses, that is when you know that yes, you are actually what, being induced. Because tell me now, what will make a trader, somebody that knows how to trade, after looking at setup, the setup is very beautiful, you place your stop loss, you place your order, and you enter the trade, and you're waiting, and suddenly price goes against you and hit your stop losses, and you're like, what happened? You have been used as inducement without you knowing. That thing you saw that it is a perfect entry, that was a trap, and that is it. So you have been induced without you knowing. So all these ones we are just looking at to find inducement. It is something that we SMC traders, we create on our own, and we say that people that enter early, we want price to use them as what, inducement. And then we that is entering late, price have finished have already hit their stop loss, then price will not see, there is no need for price to come deeper to hit our own stop loss. Rather, price will take our order and go our way. All right, that is what, just what, an assumption. Because the truth is that even when we are assuming that that level is inducement level, that level can actually hold and play out correctly. Yes, it can actually hold and play out what, correctly. So you see this inducement of a thing, just understand that you want to see a level, a stop loss. You want to see that price took out some persons. Price took out the stop loss of some persons before taking your order. That is the criteria. Price took out the stop loss of some persons before taking what, your order. Price took out the stop loss of some persons before taking your order. That stop loss that price took away is what we call what, inducement and liquidity sweep. So then price tap in your order and what you expect price to go your direction. So that is it when it comes to what inducement and what liquidity, guys. If you find this video very interesting and very educative, please do well to like, subscribe, and turn on notification bell, and follow me when I post next content. Thank you very much for staying up to this time. God bless you. I love you guys. Wow.